Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here with Dan Mickelon today. How you doing, Dan?
I'm doing great. How you doing, Ben?
I'm doing okay. One day at a time.
Just okay.
Just okay. Well, I'm doing good. I don't have anything to specifically point out, but Seth's out today. He's got some work stuff outside of the office, so he's won't be joining us today, but we're looking forward to having him back next week. You're listening to Money on Tap. We do financial planning, investing. We call it three-dimensional investing because of all the different facets that we offer to you and the people that we work with. And, looking forward to today's show. It's about investing in energy. And I think that's a big topic right now. A lot of people are, some people have been riding this wave up, and it's up and down a little bit, but it's been a good hedge against the market these days. Yeah,
I think we've spent a lot of time in the last, 6 or 8 or 10 shows talking about inflation and when to enter the market and different things that are kind of, pertinent to what's going on these days. But specifically, we often point out energy investments as a way to combat inflation. And today's show is going to be a little bit about how do you exactly go about doing that and what different types of energy can you get into, too.
Yeah, exactly. And I think that's a big question for a lot of people is where do I go? We hear a lot about, this company and that company, and they've made a lot of money or they've really risen. Is it time to get in or time to get out? And I think that's a big conversation in today's world. So we're going to cover a lot of that. If you have questions specifically for us about energy or anything else, you can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Before we dive into the main topic of our show, energy, we have for you our money in the news.
And first up, we got an article here from CNN. This is from Nicole Goodkind. Don't expect home prices to come crashing down anytime soon. Point of the article I think that's relevant for everybody listening is, the value of our homes, whether we're staying in there now or potentially looking to buy or sell or in any way engaging the real estate world, has been riding very, very high for quite some time. And depending upon where you stand in that could be a good thing, that could be a bad thing. But with what's gone on in the interest rate world, particularly the Fed raising rates, which has affected mortgage rates, there's been this kind of expectation built in that it's likely to affect home values as buyers dry up and sellers are willing to lower prices to kind of stay competitive in the market. But what this article tells us is that, at least in Nicole's opinion here, that fall in prices is not likely to happen anytime soon, and it won't be as precipitous as other similar events have been in the past. Particularly the underlying reasons she presents here are that because of the whole pandemic thing and the lack of building taking place, we still have a real tight supply issue there. Right? So buyers are compelled to spend more because there's just less supply out there. And secondarily, in similar situations in the past where the Fed's raised rates, their hope to do so was to basically drive up unemployment. And based upon the July report that came out, again, with some fairly strong numbers, that effect that the Fed's looking for, or at least that part of it, really hasn't taken place.
Well, I think it's interesting, too, in this article that they talk about specifically Florida because they have seen probably some of the most dramatic increases. We actually talked about that a little bit last week. I mean, back in June, it was up year over year 18%, which was actually down from May, which was up 19.9%. So to think about a 20% increase in home prices in a year is just astonishing. And then we obviously know there's a lot of people moving to Florida for various political and so forth reasons. But, I think when you really start talking about it, they're talking about the interest rates and the Fed hiking rates and so forth. And, Fed Chair Jerome Powell, they keep talking about the number of jobs that are out there, right? So they're basically saying, hey, we think that 2023 is not going to be a big increase, or matter of fact, we might think we've like kind of hit the peak, and it might just be a zero flat year, not even a drop potentially in 2023. But looking at the jobs data is something that the Fed's looking at a lot. And they talk about how the economists were shocked that, you know, the job demand is still rising in July, even after everything that they've done with the interest rate hikes, and that there's 2 people for almost every one job. There's 2 jobs for every one person out there, which is, I mean, that's horrific. But when they said they were surprised by that, I think to myself, I mean, I'm not an economist, but with all the people retiring, we talk about it all the time. They know how many people are exiting the job market at astronomical rates just because of retirement, that no matter what they do with interest rates, unless they just crush us with up to 10%, I mean, I just can't imagine that job demand is just going to start dropping off the table. I mean, everybody's hiring.
Yeah, it really hasn't slowed down. I mean, and we continue to be looking here. So if you're interested, reach out. But what's scary to me about the moves the Fed's making is we're all realizing it every time we go to the pump, every time we go to the grocery store, every time we buy anything, we see the effect of this. But between their, not recognizing that inflation was actually something other than transitory, right? Never hear that word again. And then to see them, take the steps they've taken and to not have the effect they were seeking, I'm wondering what they are getting right at this point. It doesn't seem to be much.
The only thing that's transitory is their opinion.
That's a good one right there. Mark that one down.
So, I mean, when you really look about it, it's pretty crazy. And it's funny because we're talking about energy today. And I thought, Dan, this article is so relevant because they say it, one of the quotes in this article is, it's all about oil. Because, even though the price of oil has gone down, and we hope to see that at the pump, sooner than later. And it's gone down a little bit across the board. I think everyone's seen a little bit of relief, separate from the still 70% increase. So, but when you really look at it, they talk about how, oil and the cost of that is just going to start bombarding a lot of businesses and their ability to do business, therefore pushing the job market down. I think that's right. But then we probably get to 1 job for every 1 person. So it's still going to make it a competitive environment, is what it is. Next up, we have Social Security. So this article comes to us from CNBC. Social Security could be a front burner issue in November election, how the results may influence the program. And I think this is great for our listeners because some of the data brought here by Lori Connish is really valuable for kind of the planning aspects of a lot of the people that are listening that are retirees and what's going to happen with my Social Security. They note that the program has basically a 13-year timeline. I think that's even generous in the time period from what I know. I think the last...
It's another moving number out there.
Yeah, I think last time I heard it was going to run out of money in 2034, so that's not quite 13 years. But they're talking about this being kind of a front-runner issue for the election. I don't know that I entirely agree with that, but I think the PAC of Social Security, this Mr. Brahman, is really trying to make this a very aware conversation and putting people on the fence to make a decision of where they stand running for it one way or another. And obviously that's going to make people think about who they're running for, who they're voting for. So that's interesting, and I find that compelling. I think one of the things that really comes out of this article for me, for our audience, is really that this is going to, with the inflationary events going on here, the one positive about Social Security is that you expect to see an increase again, probably a historical increase in your Social Security distribution. So for the people who are really struggling financially and are highly dependent on Social Security in one way or another, they should see a very vast increase this year. I think more so than what happened last year.
Yeah, I mean, the article points to the fact that Social Security, at least to their polling, runs about 5th in terms of what's on people's minds as they head into the election booths this year. And, he's clearly motivated to try and push that up the ladder. People generally probably don't vote on their 5th most important issue. But the fact of the matter is, whatever side of the aisle you're on or has historically voted, just about everybody out there is going to find their way to Social Security at some point, or so we all hope, right? If it continues to be out there. So, I think the takeaway is just be aware of where your candidates stand and make sure it's in line with what you think that the program is meant to be for you and for the generations to come, and vote accordingly, because it is one of those things that is generally kind of a nonpartisan issue. It's just out there, for us all. And one of the senators that Biden was tweeting about, Senator Scott, he made reference to the fact that there should be something that comes under review for reform every 5 years, and the Biden administration wasn't a big fan of that. And I'm not really sure where even personally I stand on it, but the fact of the matter is that it's generally ignored and not really paid a whole lot of attention to, and we don't see a lot of reform lately, other than the fact that we all know this freight train's coming, and the thing will be available to pay only 80% of scheduled benefits beginning 13 years from now.
Yeah. 80 is actually a high number. I've heard it was like below 75. So, I mean, even that's
we all get a pay cut coming one way or another.
Yeah, pay cut's coming, and it might be 100% for some people in our demographic, Dan. That's kind of where I stand on that. But, as we kind of talk through these different items, I think what's really interesting is Social Security. There is an increase coming, and I think that's strong. I think, like any political event, no one wants to stand on one side of the fence or the other until everyone has to choose a fence, right? I mean,
nobody gets elected on something 14 years out, right?
Yeah.
So no one's going to talk about it until it's imminently upon us, which is not the right way to do it.
Yeah, it's sad how our politics work in that capacity, and when you cast your vote, just make sure it doesn't go through a Dominion machine, and we should be good. So,
I'm not sure you'll be able to find one of those anymore.
Yeah, they've all been destroyed. And I'm thinking about this too. I mean, because from a standpoint of all of these things, it's like, hey, Social Security is going to going up, and I'm dealing with inflation, and then we've talked about jobs. I mean, I really think that it's going to be really, really hard for the Fed to combat this job market with interest rates. I mean, I think it's going to take a lot of pulling on those levers to make that happen. And I know I'm going back to that, but I'm looking at Social Security saying, with Social Security going up, jobs in high, are in high, people working is in high demand. I'm really struggling to see where the recession piece comes to this economy without the Fed really inducing it with dramatic pulls, because it's just we have money continuing to flow, whether it's printed or not. It's flowing and the jobs are still there, and we don't have enough people to do them. I think we've created kind of a very bizarre, set of events inside this. And I think some of the criteria that they're looking at are just not going to drive it. But, they can push the rates up, and I think they will end up just pushing job pricing up, which is exactly what they're trying to reverse. It'll be interesting to see.
Third up, we've got an article here, Why Warren Buffett and Bill Gates Love Farmland as an Investment. This comes from Stephen Krussman, and this is out of Yahoo Finance. And, these are two names that you hear a lot on the show, and, it actually just makes me think we haven't had an Elon Musk story in a couple of weeks. That's basically an unheard of streak right there. But
actually, CNBC was just talking the other day about how much Musk news they have because of Twitter. But go ahead. Yeah,
we have to dig back into that. But, we got Buffett and Gates, two other regulars here, particularly Buffett. What the article talks about is two people who have got pretty storied investment track records, particularly with Buffett, but Gates has been doing pretty well on his own, and how they have for a long time gravitated towards farmland. In fact, it makes reference here in the article, and this is, of all the things we've read about him, this is one I hadn't heard yet, but it says that Warren Buffett bought his first farm before high school, which I thought was pretty stunning. But Gates owns right now 242,000 tillable acres and is one of the largest farm owners in the country, which is incredible that he's just buying up these vast swaths of land. But deeper into the article, it talks about how for people who are in a position to do this, and there's different ways that as small individual investors you can get in on this, that it's not risk-free, but there are so many government subsidies in support of the farms, since about the 80s that they could put into place, that they really are propped up in a way that, it can be hard for them to fail outright because of the government money behind. So this notion of farmland as an investment, I think it's pretty interesting, and I think it's one of those things that would probably play out to be, to some degree, recession-proof, right? I mean, we have to keep eating, right? So we'll always be producing crops, whether they're, directly for consumption or going into industrial products. The need for development of that land, use of that land, production off of that land in a fashion that's supported from the government, is going to be there for the long haul.
Yeah, I've been reading about Gates buying farmland repetitively, and I think as a listener and kind of what are they doing and why are they doing it, yeah, there's definitely some benefits from the government subsidies for sure. I think it's interesting that Warren Buffett said that he'd buy 1% of all farmland or 1% of all rental properties for, what was it, $25 million?
$25 billion.
$25 billion, yeah, right. And but he wouldn't give you $25 for any sort of coin currency out there, which is hilarious, because he said there's no value to it. You just have to sell it back to somebody else, and so I think that's a really good point. I mean, they're not making more land. Land's a great opportunity. We have a lot of clients who invest in real estate. There's a lot of things that we do around that real estate that we help people with, and if you're dealing with real estate issues and so forth, that's definitely something you can reach out to us on. We have a lot of things that we work in the tax side of that for. But, I think when you really break it down, there's other ways, and I think we're going to bring this up in our next show, of other ways that people are investing in real estate, even with things as low as $100. So I'm excited to talk about that article next week, and that'll be fun. I wanted to bring that to the table, but that's, whatever, Dan. So we'll leave that tidbit with you for next week. But you're listening to Money on Tap. That will do it for us with Money in the News. I'm excited about our show, Investing in Energy. It's an area that I spend a lot of time investing in. I have a lot to say, so this may end up being 2 shows. But for our listener, it has been a wonderful investment for the last year, especially with people who are dealing with inflation and trying to manage their portfolios. And if this is something you're interested in, the time may not be run out quite yet. So listen up, and we're going to talk about some interesting things. Don't go anywhere. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com, and we will be right back.
Ben, how often do we have somebody come into the office and they don't have a financial plan? And how critical is it for us to put the pieces together and make sure that their future, their retirement, is a successful experience? We talk about it all the time here at Money on Tap. If that's you, give us a call at 855-226-8551 or info@yourmoneyontap.com. Whether you have 100,000, 500,000, 5 million, look, folks, we have the right planner for you. Whether it's Ben or myself, Seth Krussman, we're here for you to get the plan together and make sure that next step is right.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here with Dan Mickelon, and we're planners and partners at Brayshaw Financial Group. You can reach out to us at 855-226-8551 or email us at info@yourmoneyontap.com. We are talking about investing in energy. What a big topic, Dan, huh?
It's one of the biggest, and it's been lately one of the best too.
Yeah, it's been a big player. I think the big conversation about energy, and a lot of people might have, maybe already left because, for some people, energy is just oil, and they're not going to invest in oil. And I have clients that are, completely wholeheartedly against any sort of crude oil, drilling into the ground, the fracking. That conversation is a scary one for them. They feel like, they're part of, giving back to the earth is outside of taking from its natural resources.
People don't want to contribute or profit from the, pillaging of the planet in that perspective. I mean, we certainly hear enough of it.
What a great adjective, Dan.
Yeah. I mean, I think it's a verb, but.
Yeah, exactly. That's why I do finance.
That's the Catholic school grammar didn't really stick. I can tell you that.
Yeah.
But, it's definitely a topic that, if you're considering investing and you're taking a look at, kind of some of the bigger and again, lately best performing companies out there, you're going to see a whole slew of energy. And it's a topic that people have strong opinions on. Some people are I say the majority of people are probably just out there for, what's the best investment? How can I garner the best return? What's going to pay the best dividend? And quite often those are energy companies, and specifically oil companies, at least lately. But there are some people, like you mentioned before, that have that social conscience and, are a little bit more concerned about participating in some form or another in an industry they just frankly don't agree with or just don't feel great about.
Yeah, and I think that's not what this show's about. We're not talking about just oil or, hey, I've got to, pop another hole in the ground and drain this puppy dry. That's not what this is a conversation. We're going to talk about all facets of energy today with you guys. And, there's a number of different areas in energy that you can participate and be probably fully 100% on board with, feeling good about that. And I think the first sector that we're going to talk about is the renewable energy sector. I think that is so much bigger and so much more broad than anyone gives any credit to.
Yeah, and I think, it just kind of came to mind, and I don't want to veer off course too far, but, when you think about the energy that's available to us today, and that's primarily oil and gas, versus renewables that, have tremendous upside and are ultimately going to be better for the planet, but just are not really there yet from a practical point of view. You may overlay your opinion on the source of the energy and the damage it does to your actual investment time horizon, right? If you're looking to produce an income and looking at near-term returns, perhaps oil and gas is something that you really do need to consider if you're going to be in the energy world. But if you have a little bit longer time horizon on any given investment, some of these renewables might be a great opportunity to enter into them when they're not, fully producing and not a mainstream producer of the energy we need at this point. But down the road, they certainly will be. You have, I think, tremendous upside looking at it from that perspective.
And I agree. The first renewable resource, solar energy, we're going to talk about is exactly that. I think, we're kind of on the front end of it really being or coming to an efficiency level that's becoming more and more viable. Solar energy, I think, probably has another 5 years to go before we really start monetizing that in a much stronger method. But the demand for it is there. So I think the research and development teams they're working 24 hours a day on this stuff. I mean, they're constantly. I see ads about the efficiencies of solar panels going up, and it's a constant increase. And I mean, eventually, hopefully, we can put a little quarter on the top of our house, and it's a solar panel, and it's pulling in all the energy we need. I mean, that would be great.
In solar right now, I mean, it's definitely I was about to say catching fire, but that's a terrible pun. But anyway, more and more you see the solar panels going up on people's homes, and I've seen a lot of that going on here locally. Actually, a ton of it. And it's not really an investment in the sense of working with us to invest your money in the stock market, but that might be an investment you choose to make in your home in a way to participate in energy on a kind of literally household basis, where you can just make an investment to reduce your cost and hope to save money over time. Yeah,
and I know there's a lot of people that with solar it's kind of a mixed bag. I mean, you've got kind of this clean energy gathering source that has a 20 to 30 year lifespan on a panel roughly, and but the panels themselves, both making them require oil, and then they've got the fact that getting rid of them is very toxic to the environment too. So you've got this kind of like, do I want clean energy for 30 years and then kill it for the next 60, or do I or 100 or whatever it is? But I appreciate the efforts of what's going on, but I do think we're a bit away. But I think from your point, it's an investable asset for our listeners for sure, because I think there's a lot of ETFs out there. I know TAN is one that comes to mind. That's solar based. I don't know if that's a potentially good investment for our listeners for what their goals and situations are. But if you're trying to get exposure, there's opportunities out there that you can get mixed bags, like with TAN, it's an ETF, so you've got a lot of different companies that they're investing in. It's not just one specific solar company, and they're changing out the company. So I think you can get exposure to these things, but again, like in the ETF space, you're not getting the dividend yields that specific stocks would maybe drive for you. And I think there's a long way to go before the intrinsic value of what's the underlying holdings are really going to show for someone's portfolio. So this is not by any means a short-term investment. I think that was your point to begin with a lot of these renewables.
Yeah, but just to just kind of run down the list, of the options, inclusive of, but additionally beyond the oil and gas stock, we have renewable energy stocks. Will cover topics in different types of renewables such as solar and wind. Back to the oil and gas realm, you have oil stocks, natural gas stocks, liquefied natural gas stocks, and then ultimately you have utility stocks, electric companies, things like that. So you can invest in energy and energy production and energy delivery at literally, any point in the chain. There's options there, and there's individual companies you can invest in. There's ETFs that kind of cover that whole entire segment or sector of a given industry. So there's many different ways to get into this, many different ways to build a specifically energy designed portfolio, and we can help tailor that to cover all bases, inclusive of any kind of social governance preferences you might have.
Yeah, and I've had people who have been okay with investing in natural gas or liquefied natural gas because at the end of the day, the gas usually is at the top of an oil well, and they're able to literally just tap the well and grab the gas, and they feel like that's acceptable. But the fracking events, I think what's really interesting about fracking and the misnomer of it is that oil companies go in and they only frack those things that they really need to jar the oil out of the earth. The truth is every oil well is fracked, every one of them. So there's different levels of fracking, types of fracking, but the oil is in the pits of all of the rock and so forth. You don't really truly find a barren hole entirely, though that would be great. I think that's kind of like the TV show scenario.
Beverly Hills.
Yeah, that's exactly what's going to happen. He shoots it in the ground and oil's just
Tennessee tea or something.
So, it's not like you're dipping your cup down there and it's laying there. So that's a misnomer. But I know a lot of people, are like, hey, my house is heated by natural gas. It just requires drilling a hole. That portion of it I don't have a problem with. And, I'm going to need natural gas for a very, very long time. And, that's a reasonable resource. So I have had people who are totally against oil, but okay with natural gas pipelines.
Yeah, and I think, to be fair, and then I'm just guessing at this, but I'm, no environmentalist, but I would guess there's a whole lot less kind of negative byproduct and less likely to have these spills and messes and kind of all that process. But for sure, none of this stuff's obtained in a truly clean way.
Yeah. And I think and when you start getting into some of these pipelines and so forth, we start looking at limited partnership investments. And I would just say for people who are listening, those are things that you want to be careful of. And this is for all our CPA friends out there that, owning those things in your retirement accounts can offer a complicated scenario in an audit with the IRS. So
I remember, collecting a slew of K1s. They just kept coming and coming and coming from those pipelines.
So, Dan invests in pipelines clearly. So, there's an interesting dynamic to that, and you got to be careful. So when you're investing in these types of companies, some of them will create adverse effects for your taxes. So be careful in your qualified side. I think just dumping into some of the other natural resource stocks, or resource, investments. One of them I think is really interesting is wave energy.
Yeah,
I think that's very, very cool. And the idea of literally catching the wave of the energy from the waves in the ocean. And I think that's something that's, there's literally companies that are just doing this. And, hey, you could get on the ground level of that. And that offers a entirely renewable energy source. And what's great about it is the amount of, infrastructure needed to do that is considered minimal. So because all this infrastructure, for all those who hate oil, every one of these things has to be built with, oil-based products. So you're talking the steel, you're talking about the plastics, you're talking about all of those things. You get a milk jug at the, at the store that required oil to make. So it's hard to quantify that. So the idea is that, hey, hopefully you're building one thing with oil and then you're harnessing, millions and millions and millions of, watts of energy.
I think it'd be really hard to totally pull yourself out of oil participation. You can minimize it, and there's lots of different things you can do, but to totally exclude yourself from oil-based product would be a very difficult life.
Right. And I think most of the listeners, and you're probably listening saying, well, yeah, I have a gas car, or I have a, hybrid car or an all-electric car, and intrinsically that all this stuff requires oil to get to that point where you can use it that way. So that is the hope. The other thing about waters is the the hydroelectric water, which is really interesting. There's a lot of hydroelectric, energy companies are in New England because there's just so much actual water moving around here that they can grab it.
Yeah, I mean, used to run the mills. Now we can produce electricity off of it. It's the same. I think that would be the ultimate clean energy get if we could ever find a way to harness it appropriately, because the one thing that never stops moving, right, is the ocean. I mean, it's not sensitive to clouds like solar would be, and other weather events that can disrupt many of these clean sources. But if we can find a way, and they have discovered it, we just have to bring it up on an extremely significantly bigger scale than we're able to achieve now. But be powered by the ocean would be, I think, a tremendous outcome somehow.
Yeah, I think that's really where a lot of this stuff is going. And I think there's a number of ETFs out there that will give you exposure. So if you're a long-term investor and you're really looking for some exposure in that space, you can give us a call. We're happy to talk to you about it. We can give you some ideas and some different places to look. You can reach us at 855-226-8551 for that. There's a lot of these that I really, really do like as investments. And I think that if you've got the right time horizon, that there's just so much demand for renewable energy to be created that we're pushing everybody to go focus on that. I mean, we're even pushing the oil companies who are complaining about it and trying to create more renewable energy. I think that's interesting.
You've even noticed that in some of the messaging from these bigger companies, whether it's Exxon or BP or, you name it, but they really are trying to reposition themselves as energy companies as opposed to oil companies.
Yeah, no, and they are. I mean, I think I read something where Exxon was, they're doing all sorts of different types of energy research, and the amount of R&D they're doing that has nothing to do with oil, I think is actually tremendous and very interesting. The one piece that we're not talking about is wind energy. I think that's the piece. I'm not a big wind energy person. It's not my favorite thing. I mean, I look at these windmills. I don't think they're very attractive. I think they've ruined the beauty of a lot of terrain and mountain. But I thought it was interesting because when Texas had that big freeze a couple of years ago, and the deep freeze, you have to shut the windmills down. I think at like 20 or 28 miles an hour. We talked about that on a show a long time ago. To think that they had to use petroleum-based resources to spray all these windmills with, dripping onto the ground. I can just envision it, right? Just trying to get these things defrosted. It makes me kind of want to chuckle because probably that one thing minimized all of the value of that.
Whatever was to be gained from that particular windmill for a year just got thrown out the window.
Yeah, exactly. So for me, that's kind of laughable. I think wind energy has a long way to come, way more than even solar. I think we have to have windmills that can just run and run and run through hurricanes. I mean, we just got to have some sort of support base that can just harness as much energy as possible, because shutting these things down and mitigating that and all the stuff around that is just not strong enough.
I know, and an ETF to look at if you are interested in that is FAN, F-A-N. That's a good one we've come across. But just anecdotally, there's one I travel up and down to Boston quite often, and when I'm coming up over the Zakum or going back, there's this one gigantic windmill just standing there out of no place in like the middle of the city, right by the casino there. Yeah. That thing is never spinning, ever. I don't know what it's there for.
Yeah, exactly.
You expect to see wind farms, too. You usually don't just see one, like, standalone massive windmill. It's usually a whole slew of them, right? Like, I've seen that down the Cape and other parts of the country. But we just got this one in Boston that's doing nothing.
Yeah.
And I just don't get it.
Yeah, well, probably after they put it up, they're like, it's facing the wrong way. So, yeah. Oh well, Bob. So that's an interesting thing. You mentioned utility stocks, Dan, and I think this is really interesting because this is where we have all of this energy that's harnessed, and it's funneled through the utility companies. And the truth is when you turn on the lights at your house, unless you have solar panels on the top and you're completely off the grid, you really don't know where that energy is coming from. It could be oil based, it could be wind based, it could be hydro based. It's they're just buying energy at mass bulk, and sometimes water's low and not running that fast. And, I know Seth, he has a cottage out on, one of these hydro dams, and they've had years where, it's been such drought that they haven't been able to use the water or the lake, the man-made lake there, because they're running the hydro dams, and they actually ran out of water. So what do you do? Surprising to think of running out of water for a hydro dam.
Yeah, and for back to the point about the utility companies, right? I mean, we pay them and plug into them literally just to provide electricity, and there's no, to your point, we don't get any say into what the real source of that electricity is. And so they're going to meet their demand by whatever means necessary. Unfortunately, you can find yourself participating in something you may not have wanted to, but it's just a facet of, keeping the lights on at home.
Yeah, absolutely. And I think a lot of people think of the demand of electricity as stagnant. That's actually not true at all. The demand that we have for electricity every day is growing and growing and growing, even though our population base is not really growing at the substantial rate that you'd think comparatively. It's the number of machines and things that we have. So even with, we had redone our lights in our studio, and they were, super electronic, electric efficiencies and whatever, and they 10 times or 1,000 times less electricity use. And we have all sorts of things in this country, rebates and whatnot, to put that infrastructure in. But yet our demand continues to grow and grow and grow. And you think about all the iPads and the iPhones, and then you got a laptop, and then you got a TV, and then you got, we got 4 TVs in our house. And it's just the demand for the electricity is just continuing to grow. And then on top of it, our electric grid that we've talked about a week or two ago can't support 20% of our population roughly even getting electric cars. We can't even support the demand that an electric car fleet would require.
Yeah, I'm a believer in ultimately moving towards these renewables, but I don't know if you noticed what just happened in California. It was really laughable.
I know, it is laughable.
They're requiring every car to be sold after 2035 to be fully electric, right? But they're going through this power outage there where they're literally telling people you cannot charge your cars during certain hours of the day.
Yeah.
So you have to buy an EV, but you can't charge it.
Yeah.
So it's just...
it really
we're
doesn't.
just not ready. We're not ready.
Well, California has done a huge disservice in their power grid. They have done very little to advance or enhance or to keep it updated or within standard. And that's, had massive forest fires because of their power grid even. So I would just say it's general ignorance in whatever leadership is kind of involved in that to balance the safety, the well-being, the long-term objectives. Even if you're going to be all electric, you need a way to transport that electricity. It really is hard to really understand what's going on out there. And that being said, you're listening to Money on Tap. Don't go anywhere. We're going to talk about a number of big player companies, stocks you might be interested in, what they're doing, and areas that you might be able to look for, as well as the risks and the concerns around investing in energy. So don't go anywhere. We'll be right back. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com.
For a number of our listeners, they have a lot of questions, and you might be one of them. Today, we're just offering what we call Zoominars, webinars over Zoom meeting rooms where we have top experts, Social Security, estate planning, and financial planning experts for you to speak with, do a private consultation that way today. We're also having webinar-based Zoominars where we're going to have multiple groups where you can be part of that and enjoy that as well. Give us a call at 855-226-8551 or email us at info@yourmoneyontap.com to schedule your Zoominar.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here with Dan Michelon. As I mentioned earlier, Seth's son out today with some work outside the office. I'm looking to have him back next week. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. We're talking about investing in energy, and we mentioned you could give us a call. We have a number of ETFs that can get you exposure to the number of renewable ETF resources for investing in long-term investing. Give us a call. I'm happy to share that with you, talk to you about some pros and cons of that. A little bit of what's available, and maybe there's a specific area you want to get into. One of the energy spaces we didn't talk about yet was nuclear, and I think that's a whoa, say nuclear, and everyone gets a little nervous on it. I think it's interesting because there's a lot of companies who are getting into what we call clean nuclear. Nuclear, obviously, there's been, in Japan they had that horrific accident when they had that.
Tsunami.
The earthquake and the tsunami. And they've done a lot of work around, mitigating that and dealing with that and creating. But this clean energy world in the uranium space, it seems to have a much better better environmental, impact.
As long as you don't have an accident.
As long as you don't have an accident.
When it's up and running well, it is it's the cleanest source out there for us at this point. As of right now, globally, there's 340 nuclear plants out there, and there's actually 55 under construction.
Yeah.
So, I mean, the volume is due to increase, and that's all around the world that's happening. So, in terms of an ongoing, managed well, clean energy source, nuclear is absolutely the future of this world.
Yeah. And I think a lot of people, as much as we want renewable and maybe like the idea of nuclear is horrific in your mind. I mean, I remember when I was a kid, right? The governor of New Hampshire used to be Sununu's dad, and they used to call him Sunuknu because of the
Seabrook.
Yeah. And so I always remember that because there's just so many people against nuclear. But I think, they've got this, phrase, and I don't know how much it's just sales, but the idea of clean nuclear, we were joking around about this. Well, now everything's clean. It's clean oil. We're working with clean this. So, a lot of phrasing really changes stuff, but I think we've learned a lot of lessons from nuclear that now these companies are saying we really can go to town and mitigate so much of the demand that's growing, which is why, we have more than 10%. It's like 15%, increase in the number of plants coming online. That's crazy. That's a lot. There's a number of ways to invest in things like uranium too in that space that allow for some very interesting opportunities long term if nuclear takes off the way I'm hearing it's going to, because of the volume of energy that it can create is astronomical. As we promised, we're going to talk a little bit about some of the companies. There was an article in Motley Fool that talked about 5 energy companies in 5 different sectors that are some of the leaders in that space. Brookfield Renewable, which is a very well-known company, they're just globally diversified in renewable energy, and they are actually, I believe, own most of the hydro energy here in New England, from my understanding of that. And they focus on hydro, solar, wind, and energy transition assets. They've got. One of the things that people are driving and looking at, big companies and so forth in the energy space is because they're looking for steady cash flows. And Brookfield talks about their steady cash flows in this article and expects that their cash flows are going to grow by as much as 20% annually through 2026. And they go on and saying supporting up to a 5 to 9% yearly dividend, and making Brookfield an excellent way to invest in renewable energy. Now, I don't know if Brookfield's the right investment for anybody or that they'll hit any of these numbers, but it's interesting because when you really see what people are looking at energy for is either a dividend yield or just a strong company asset because the demand for energy is not going anywhere.
The good thing about these renewables from an investment perspective, right, is that these companies have all had the opportunity to see how oil did it for so long, right, and the really successful oil companies. So the successful oil companies don't just drill for oil. They drill, they refine it, they ship it, they pipe it. So renewables are following that model, at least Brookfield here is in terms of trying to capture the entire, literally from source to your house transformation and delivery of this energy. So the model's out there, and it's just trying to find a different energy source to push through that pipeline and find a way to profit from every bit of the transaction. Yeah, no,
and I think it's an interesting play. I actually know some people that work for Brookfield, so it was interesting to see that in the article. And I think ConocoPhillips was another one that they talked about. And here's an example of, ConocoPhillips believes that they're going to have $80 billion in free cash flow by 2031 with just about a $50 a barrel price target of oil. We're well above that, and that's a ton of money inside that space. I think again, energy brings cash flow, and that is a big issue. And I think for retirees, people are looking at this saying, how much energy can I put in my portfolio for cash flow? I've had people talk to us about that, and because we like energy. I'm a big energy investor. It's a big focus of what we do. And I don't even own some of these companies, but it's interesting to look at the constant viable stream of cash flow. But we say this all in a hesitant breath, right? Look what happened in 2020. We got shut down, pandemic, never happened before in this world. Oil was like, what is it, negative $100, $50 a barrel. I can't remember what it was. It was
I don't think it got that far back, but it was less than zero.
It was like, hey, you bring your own barrel and we'll pay you to take it because we have nowhere else to put it.
And we were joking, sitting around there about filling my pool with it.
Yeah. Just come on over and pump it in, So it's just like, drive up with like 55-gallon buckets, from Home Depot with a screw on top. It's like, it was definitely a very bizarre time. And we saw oil companies get completely slaughtered. And so people lost their shirt in oil investments during that time. So there's massive risk inside energy that's kind of unforeseen. And we've seen energy go up and down in high scales. And I think it's important to know profitability. And I think ConocoPhillips makes that point that $50 a barrel is good. But I remember it was just a few years ago that, it's irrelevant of, COVID, but years before that, oil was like $35 a barrel, and it was super cheap, but it used to have been 90.
Yeah, no, and right in here they reference some of that. It's back in 2008 it was over $140 a barrel.
Yeah, and
then crashed down in 2016 to as low as 30, and then hit 2020 to zero, and then this year, earlier in the year, we're back up to over $100 a barrel.
Yeah, that's crazy.
So there's a lot of volatility in that market. There's a lot of risk in that because it is so sensitive to this whole supply and demand element, and that has a lot to do with a lot of investments. But I think over the long view and taking a look at the history of oil and how we've used it here in this country and globally, there's a lot of things I like about it as an investment.
Yeah, and I think you talk a lot about a lot of companies, and one of the ones mentioned in the article was Chevron. And the thing is even with COVID, Chevron was able to increase their dividend in 2022 for the 35th straight year. So it's actually more than a dividend aristocrat, which is solid. That's pretty interesting. But you think about COVID, a lot of these companies either shut off their dividend, turned off their dividend, went out of business. A lot of these bigger companies like Chevron and Occidental Petroleum is coming to my mind because I know that when they were like basically on the thread of going out of business, they went and bought a ton of shale oil. I think they bought all the shale oil in Colorado, I think is actually what happened. But, that led to now Warren Buffett's now petitioned to the SEC to get permission to, own up to 50% of Oxy. So that's kind of really very interesting to see these companies who were like, literally, we're either going out of business or we're going to grow like leaps and bounds. And so, they actually made that transition. I thought that was interesting. And it took a lot of guts for leadership to do that. But they were literally, I remember Oxy was $8 a share. I don't know how low it actually got, but I remember seeing it at 8, and now it's at 70, I think.
Yeah.
So interesting spaces to be at. Nextra Energy was another company that was mentioned in the article, and it expects to grow its payout at a 10% annual rate through 2024, which is also a renewable energy dividend stock, and I think that's an interesting opportunity there too. So if you're looking for those renewable spaces, now whether Nextra is right for you, I don't know, but another space of a company that's huge, large, and offers that kind of positioning for people. So the one nuclear company that was mentioned in the article was TC Energy. I don't do anything with TC Energy, haven't, but it's one of the largest natural gas pipeline operators in North America, and it's based out of Canada. It's also one of the country's largest producers with a focus on nuclear energy and renewables.
Kind of covering all bases there.
Covering all bases. That's, and they're running stuff through Mexico and everything else, pipelines, you name it. So, it's an interesting conversation. I think as they're talking about these, number of companies, what we've discovered here is just like the ability to see, hey, there's a company almost out there that can cover almost any interest that you have. So, Brookfield, hey, listen, you want just renewable energy? Like that's a really good resource for that. ConocoPhillips, is that it's diversified oil and natural gas producer. Chevron, it's diversified with lots of things, but it's integrated energy companies across the board. Nextra, it's a leading utility and renewable energy producer, and then you've got TC Energy, which is a leading pipeline operator, which is moving the oil and so forth, but has a nuclear option as well. So you listen, these aren't recommendations by any means, but our point on this, and the thing that the article brought out, was that you can pretty much find an energy company for any investor. And I think that's where, if you have a question about how to get, your cup of tea to really feel good about getting a space in energy, we can find a company that, we might like and that might fit your concerns about types of energy, the consumption of it, what they're doing and how they're doing it. There's a lot of different opportunities out there. And if you want, you give us a call, 855-226-8551, and we can discuss that more.
And the reason, again, kind of off the top that we dove into this for you guys today is that, if you're looking for opportunities as to where to invest and what to invest in during periods of inflation, which is what we're experiencing now, it's the things like energy and food, healthcare, the industries that we just can't live without present some of those kind of best safe havens and best opportunities to make money and to produce income when inflation's high, when the markets are generally down and there's a lot of turmoil and volatility out there. It's that kind of fleeing back to the things you have to have.
Yeah. I think a lot of people look to energy specifically for, an income play and make the movement of the value of the stock as irrelevant. Like they're going to buy Chevron, it's going to go up and it's going to go down. They're going to buy Exxon, it's going to go up, it's going to go down. But they just continue to collect the dividend and use that as an income source. And I think that's probably a better methodology to look at energy, especially now, because energy is not low. It's not like you're getting in at the bottom here, right? So, but there's a lot of bandwidth to energy, and there's a lot of demand for energy, and demand's going up, and when demand's rising, people start creating more money in their pocket.
And there may be some of these renewable opportunities that are not really peaked yet. So that's going back to what we spoke about earlier. If your time horizon's longer, if you're not necessarily looking for today's returns, but looking for an investment that's going to bear fruit, 5, 10, 20 years down the road, this renewable energy bet is a really strong one to take a look at.
Yeah, I like that a lot, and it's something we look at pretty regularly here. I got 3 things to offer you for, basically things to look at when investing in energy. And I'm going to start with the first one. Look for a low-risk business model. Look for a company that's infrastructure's there, they have stable revenue, they don't have huge fluctuations and so forth. I think that's the first thing. The second thing I have here is a strong financial profile. Let's see how much cash they have on hand, their borrowing capacity, what's their dividend doing? Have they been consistent? Are they conservative in their payouts? Look for a conservative payout company. You don't want somebody who's pushing every penny out and then all of a sudden they don't have cash to grow and to meet issues and so forth.
I mean, something we talk about a lot is dividends, but one thing just to jump in real quick is, a sign of, less than strong financials would be companies who, need to borrow money to pay the dividend.
Yeah. And that's, you want to make sure that people are paying their dividend post that, it's part of their free cash flow. And, and that, whatever debt they have, it makes sense. It's reasonable. It's a real investment. It's not, like you said, borrowing to pay others. That's a big issue. And a lot of companies hide that. They want to keep a nice high dividend because it attracts people. But, you may be a person that's saying, I don't need the income. And honestly, the income's a problem. So maybe we find an energy company that's, not paying a dividend, that's focusing on their infrastructure, their build out. And that might be a renewable.
Yeah. Sounds like renewable.
Yeah. And so, you're still working and you're like, well, I don't need dividends. I don't need taxes on that. I want all that money to be, tax deferred. So we'll buy the stock and let it sit there and let it defer. So there's a lot of moving parts there. There's a lot of things inside energy that drive conversation. And I think if you're not currently invested in energy, if this is not something that you have enough knowledge or bandwidth to really get a handle on, but you realize, hey, this should be part of my portfolio, this is something I should be looking at, this is where you sit down with us, you sit down with somebody and you figure out, hey, what do I do to get the right exposure, get better diversification? Should I be an energy investor or should I not? I mean, those are the things that you need to ask yourself.
For most of us out there, energy is it's a really strong part of a portfolio. The option of should I be invested in there, should I not be invested in there? I think it makes sense to consider some type of energy, just given the fact that there's all that upside potential. There's the present day dividends if you're looking for income now. And it's one of those just staple things that we need to have. And when the market's behaving as it has and technology's fallen out of favor, energy is one of those things that can just buoy your portfolio, even if it's temporary.
Yeah, absolutely. Well, thanks for joining us today. We appreciate having you. You can reach us at 855-226-8551. It's been great kind of going through this portion of the conversation of energy in your portfolio. We look forward to hearing from you. You can also email us at info@yourmoneyontap.com. Got another email on a show idea. We're talking about that. I think that will be interesting. And you make it a great week. We'll talk with you then.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.